Hello, this is Steve Nison, president of candlesticks.com, and welcome to our newsletter, or strategy newsletter, I should say, highlights. And as you know, we've been doing this with text previously, but we've gotten so much overwhelmingly positive response when we use video for market updates and our other educational resources that we're shifting over to this format now for highlights. In addition, it allows me to give you more information because I can see things kind of on the fly that I could talk about when I'm discussing the slides and that I may not have been or would not have written about. So let's look at this week's issue, or at least this issue. The idea with this one is the importance of adding Western technicals to our analysis. Now, for those who are familiar with candlesticks, you'll know there's absolutely no reason why you would go back to a bar chart. In fact, for those who are trading with a bar chart, you're trading at a tremendous financial disadvantage. But that's very different than saying don't use bar charting techniques. And one of the things I bring out in my educational resources is the overwhelming importance of adding Western technicals to our candlestick charting analysis. And let me show you exactly why this is the case in this slide. Now, the arrow points to a shooting star. It's a candlestick signal. And one of the major attributes of candlesticks is their ability to give us early reversal signals in 1, 2, or 3 sessions. So here we have a shooting star, and to refresh your memory, a shooting star is a candlestick line with a very long upper shadow, small real body at the bottom end of the trading range, and by the way, the real body can be black or white, and it's okay to have a little bit of a lower shadow as shown here. And the shooting star is visually showing us the market's rejecting higher levels. Now, we may be thinking of selling short on this shooting star, and actually I think it's a really good strategy in this scenario. By the way, this happens to be a Forex market, a currency. It happens to be the Euro-US. And the reason I mention that is because one of the major advantages with the Forex markets is that you can sell short as easily as you can go long. You don't have to wait for an uptick like we do on the equity side. So here, we're thinking about selling short. And the reason I said I think it's a really good potential trade is look at what happened before, right around the 127.60, 127.70 area. I'll be highlighting that. There we go. And notice how the market was ascending. This happens to be a 60-minute chart. Now, everything I'll be talking about in this issue of highlights and all future issues can be used in all time frames and all markets. So here in the 60-minute chart, it could be a daily chart. It doesn't matter. It could be a 15-minute chart. Same concept. The market is holding the highs well, but notice the warning signals we're having of potential problems. We have some long upper shadows here, and of course we have the infamous doji. The doji is telling us the market's tired, and this is a wonderful example of how the Japanese would say it's a market rising in agony. It's trying to move up. It's mainly making, here we have higher highs and higher closes over here, but it's really struggling. So this would be a perfect example of why we would use candles perhaps to exit some positions, to take longs. And for those a little bit more aggressive, you may want to think about selling short right around here. And the reason for that is because once you have a doji, you could use the high of either the doji or the prior session as resistance. So we have this high here becomes a resistance area, and so certainly I'd be thinking about scaling back on long positions here. And for those more aggressive, you can actually think about selling. But we're really looking at this area here. However, the focus of this article is on the shooting star here. And the reason I like it from a short perspective is because it's not only a shooting star, but it's confirming a resistance area. And this is one of the reasons why we always have to think about Western tools. If a candlestick signal confirms a Western signal, the odds of a trade are much higher. Now, another very important aspect is that the candlesticks do not give price targets. A lot of people don't realize that. So we need Western technicals to get a price target. So with this shooting star in mind, I would be looking for the prior pivot low down here. In other words, the low that the market made before this little rally unfolded. So we would get a reversal signal with the shooting star. We could think about selling short here. And of course, we always should have a stop. There's always a price that says we're wrong. We'd have a stop above the high of the shooting star. And our target is the bottom here, shown at the arrow. This arrow over here. So the candles are used for reversals, and the Western technicals are used, first of all, for candlestick signal to confirm a Western signal, and secondly, using the Western signals, in other words, a prior low as a potential target, and this is what happened after. Now, this highlight issue brings out a very important aspect that how you use candlesticks is just as important as recognizing the patterns.